am very curious about this thing that you wrote. I spend too much time thinking that only other people get to be entrepreneurs, venture investors, business executives, or have an impact on the world. Who were the other people in your head?
I had this sense script that's sort of like literal pane of glass, between me and the people that I knew and the world that I knew of, and people who do stuff that newsworthy on television. I don't have a craving for that kind of attention, but I think it's more like, could I be the one to make these decisions about millions of dollars or billions of dollars?
For the 25-year-old who's listening, has an idea, maybe have had it for about a year, what would your advice to them be?
Idea matters to me less than how they got there. They have an idea totally because they care about some topic, they care about some customer or market. I hope they're spending a lot of time, there in order to refine it. And then I hope they're asking themselves like,
Kevin, welcome to the show. Thank you so much for being here. It's always such a pleasure.
Thank you for having me. It's a real honor.
Okay, so I obviously did some research looking up what you have said on Bain Capital Ventures website, and I am very curious about this thing that you wrote. So you wrote that I spend too much time thinking that only other people get to be entrepreneurs, venture investors, business executives, or have an impact on the world. And this was your answer to the question, what would you say to your younger self? So who were the other people in your head back then? Who were those other people that got to be entrepreneurs, VCs, etc.?
I mean, I think that I owe everything to my parents. But it's also true that like no one in my family or that they knew were like in business or like on TV. And so I had this said script that's sort of like, there's this like, literal pane of glass, between like me and the people that I knew and the world that I knew of, and like the people who do stuff that, is newsworthy on television. And so I think I felt like there was a separation there where like, I live in a certain world and those worlds don't cross that much, I think is like what I try to express. And I think what I realized, like, like they are just as human as the rest of us. And, we all have skills and abilities that can have that level of impact. And I sort of wish I had that confidence sooner.
So when do you feel like you started having that confidence? When were you like, I'm now one of the other?
I'm hoping to have that within the next few years.
Okay, so you still don't have it.
Well, I feel it right now being here with you, of course.
Of course. We are on TV. Now YouTube is even bigger than TV, so this is even more impressive.
I guess I think about it less as I want to be clear, but I want to think about it less as like being on screens.
Yeah.
Like I don't have I think some people do. I don't have a craving for that kind of attention. But I think it's more like, could I be the one to make these decisions about millions of dollars or billions of dollars of investment? Like, could I be the person to serve as somebody's board member? It's been a real process. That my first time sitting in on board meetings, like I would like sit all the way in the back corner. In fact, I was on the board with a relatively well-known investor, and
who was the investor? Can you name?
And I should, but I like remember that I like at one point like I saw that he was out of Diet Coke, so I like got up and like grabbed a Diet Coke for him, and afterwards my partner who I was in the board meeting with was like, "Don't do that." I mean, it's like, like you're not here to do that, and but it's a good illustration.
That's pretty sweet of you.
But yeah, I think so. But I think like it's a good illustration of like, I think I came from a certain mentality about like what my role could be.
Yeah, probably mentality that's more hierarchical sounds like.
Yeah, and so it's taken me a while to feel comfortable.
So at which point did you gain the confidence to, write the multiple $1 million checks or maybe even multiple hundreds of $1 million checks? And when did you start feeling like you are a good board member?
I think it's been a process. And also I think there's no, at least in my mind, there's no like firm threshold. The things that I've gotten better at. There's experience that I now have that I think is valuable, but I'm sure there are still ways in which I'm improving. In fact, I hired a coach this year to just like do 360s with all the founders I work with, so that I can get more honest feedback. 'Cause I'm sure there's still more hill climbing to do, but I think
actually for anyone listening, so 360 review is a very comprehensive review that you do on someone, where you ask a lot of their colleagues, subordinates, founders in your case that the person is working with, and then the person who does the review gives you a comprehensive analysis of how you're doing, what the anonymous feedback is, so you can improve.
Yes, exactly. So I think as with investing, I think my personal journey was more, I'd make some seed investments. So I felt like, okay, I could bet, a few $100,000, then a few $1 million. And as some of those turned out, to be interesting or, to be top performers in some of our funds, then, I felt like, okay, like I have a track record I feel, confident in. But there are probably people along the way where I feel like I had a sense like, we need to be in business, with this person, this company. And I doubted like my ability to discern that. And by the way, in some ways I was wrong, as well. But in some cases I was right. And I think in the venture business, you sort of wish, that you sort of bet on yourself sooner.
Interesting. But in the venture business, it also takes a really long time to see whether your bets are actually correct. For anyone listening who is trying to build up confidence, what would your advice to them be? Confidence in whatever they are doing.
Yeah, I could only tell you what works for me. Not that it's perfect. But I've never. The fake it till you make it thing hasn't really worked for me. There's a sort of framework people talk about now about like imposter syndrome, that people feel like unqualified. And my honest take is that in many cases we feel that way because we are not qualified. And that is okay. And that is to say, like, I think it's okay to be a bit self-critical and sort of say, I actually could be better at some of these things, or like, this is my first board meeting and I'm 25 years old, and in fact, like, I'm not an expert about a lot of things. So I guess my approach to stuff has generally been like, how do I build up perspective and experience and knowledge as fast as I can, and just let kind of data points build up and capabilities build up over time. So this is a sort of the slow way about it. I'm sure that others could do better than I at this front, but that's what's worked for me.
No, I agree with you. I think that confidence is almost like a self-respect.
Yeah.
Like, do you respect your own decisions? Do you commit to something and then actually follow through? And that builds up confidence. So the slow way of building confidence is actually trying a thing, probably not being that great at it at first, and then getting better and better, and then seeing that progression and being like, okay, I did that, and I feel confident that I can replicate this effort on a pretty good scale. So you were employee number one on the business side at Fundera, and then you decided to make the leap to go to BCV. I have a question around, what is one thing that you learned from your experience as an operator that serves you really well in your career as a VC?
I think the context that's most valuable to me, I think, is the reality that at any early stage company, it's fragile, and it is never a straight line. And in fact, it's a roller coaster. They always say that, but I'm not sure most people feel it until they experience it. There's probably like a 6 or 9 month period of time where I was, relatively convinced we would run out of money and liquidate the business, in 6 or 9 months. And, I was often sleeping at the office, and we had this issue where for whatever reason, our lights at the office don't turn off. And so,
so you were sleeping with your lights on?
Some shade, like somewhere, it's like slightly dark corner of the office. And I was like,
sounds intense. The true startup life.
Yeah. Like I was like, okay, like if this doesn't work out, I'll spend spent like 2 or 3 years of my life on something that no one will have ever heard of, and there's a real career and other costs to that. But we sort of delivered what we had to come out the other side of that and make the economics work, and sort of the team went on obviously to do well and sell the business. And but I think that it gives me a certain humility, and a certain like growth mentality in working with founders and companies, which is to say, like, it's going to feel a lot like it's not working for a long time. And I think you have to hold on to the stuff that does feel like it's working. I think as an investor, it's not helpful to add to the anxiety of that moment, generally speaking. And you kind of have to like embody a certain like irrational belief that things will work out, because that's the only way it will. But it can and often does. So I think that's probably one of the big. I spent a lot of time. Early days of my venture, I was like, okay, it's all about like making introductions. It's all about like customers, and that it is about that too. But I actually think a lot of the job is of just like the rarer thing these days actually is belief. Like really believing in someone before other people do, before it's obvious, and believing that they will succeed and acting like that, and not adding to their emotional ups and downs, but hopefully being a bit of a rock for them, when they need you to be. I'm not perfect at that, but I've come to see that as actually a really valuable and rare thing.
Yeah, that's a great point. And I bet that's a very hard skill for a VC, for an investor to develop, because in the end of the day, you're betting so much money on this person hopefully making the thing work and giving you the return that you bet your career on. So being stoic and being supportive and still being a believer is something that you really need to tap into the darker moments, because I've seen it so many times where I've actually even seen it with myself where, in shutting down my company, the majority of people, which I'm so grateful to them through, the pivot that we were going through when we pivoted, they were really supportive and they were still like very much believers. And some people on my cap table, not too many of them, but some just kind of ghosted me and like was like, okay, you decided to do that pivot, whatever, like I'll just kind of write you off. And that sucks. That's understandable also. But because it's the reality of how VCs operate and how they see returns. But I do agree that some of the best people that I've seen operate, not even just with me, but with founders that I know had that irrational belief in them, and that belief propels the founders' belief that things are gonna work, because it's always great to have like people who believe in you in your corner. So that's a great point.
There's this concept that a colleague and I talk about, this word. Do you know this word, hyperstition?
No, I don't.
So a superstition is like, I think a lot of people, believe, but it's like kind of unprovable. The concept of hyperstition is something that like, if enough people believe, it becomes true.
Yeah, 100%.
And I do think there is some element of that. Not always perfect, but I think more likely, I think there's a magic, I think, to believing in people.
No, 100%, because if you believe in something strongly and crazily enough, then you're gonna align your actions with your beliefs too. And if it's not just you who's believing in that, then you will be propelled even further to make the thing happen, because there is so much collective energy that believes in making the thing happen. So yeah, 100%.
I guess the more hip people would.
Yeah, exactly.
We call it manifesting.
Manifesting. I didn't want to go there, but yes. Okay, so how did you actually make the decision to go to Bain? What's the story?
Well, the story is, I think my thinking was that even like 10 years ago when I joined Bain, it was becoming more and more clear that there were going to be a lot of venture firms. There's a lot more venture dollars, supply than true demand for those dollars from like, outlier founders and companies. And so I think it was clear to me even that you have to have a unique value proposition. And to me, I think the idea of building a venture firm, Bain Capital Ventures, inside one of the world's largest investment managers, Bain Capital manages $200 billion across not just venture capital investing, but credit and life sciences and real estate and private equity. And that there is unbelievable power in that network and that experience and perspective, even for, and especially, frankly, for founders at the earliest stages, if we can make that work. I mean, we're always the only team that's chosen to build this venture partnership inside of a institution like that, because it's not easy to do. But I think if we could pull it off, I think there is something really special we can bring to the ecosystem. So that was important to me.
Okay, so tell me a bit more about how that actually works. So obviously BCV is this big institutional asset manager conglomerate with a bunch of different verticals. Bain Capital Bain Capital Ventures rather is just one vertical, one team, small team relatively in comparison. So how do you guys actually work together? How do you take advantage of all that institutional knowledge, industry knowledge that you mentioned?
Yeah, I think there's a number of ways that it can work. I think the most direct people would think about would be, we have a unique customer network. So
you're actually helping early stage founders with customers. Okay.
Yeah. So, we work with a company, MaintainX, that is a, operations and AI platform in the industrials. And, Bain Capital owns a number of industrial companies in building materials supply, in, small manufacturing. And so, we have the ability to connect them with a different set of customers and relationships than the typical like Silicon Valley based firm.
Yeah.
And, that is to say, like, we can help you get Airbnb or Coinbase as customers for sure. But could we connect you with the world's largest manufacturer of some automotive component, or the country's largest aggregate supplier of building materials? Like, that's a really different network. My partner Alyssa and I we have an investment company which is in rare earth recycling, and they are in the process of determining their early customers and offtake partners. And it turns out that our colleagues own one of the world's foremost advanced materials and magnet suppliers, a company called Proterial. And so we were able to connect them, which they arranged a Japanese translator, as part of that meeting. And so being able to connect founders with that kind of network, I think, is really special. That's one element.
Yeah.
I think there is a reputational thing because we're active in those markets. Even if we don't own a specific company, they may have heard of the Bain Capital brand and they may think of it, more positively. There's a founder I work with who, this is sort of a specious example, but he went home for the holidays with his long-term girlfriend. And so he was meeting his like prospective father-in-law, and he's like, "Oh, so what do you do?" And he's like, "Well, I'm a founder. I'm CTO of this company." And his father-in-law was like pretty unimpressed. And he's like, "Oh, and we're like backed by Bain Capital." And the guy was like, "Oh, those guys don't make any bad investments."
That's amazing. Well, it seems like you're a full stack investor, not just in the company and the business, but also.
I like that term. Actually, something we've been thinking about, which is this concept that, like, especially in this like post AGI era, the most ambitious founders need full stack capitalism. That is to say, like, not only capital that understands the venture market and the venture ecosystem, but that understands the full spectrum of, how finance enables people to build businesses. They need equipment finance. They might need real estate expertise. They might, if I think about examples like our company Crusoe that we're involved with since the Series A, they are building data centers for the hyperscalers, and that's they need all expertise in all aspects, of financing and those ecosystems in order to be successful.
Yeah, that's amazing. And now that, every company is going to be in a way a technology company, that becomes even more important. On that note, because you personally, even just in this answer, you mentioned a rare earth metals company, a data centers company, you invest in infra and AI, you've invested in crypto as well. Like, how do you stay sharp in each of those domains? Because there are investors that just go deep in one subject, but you're more, I don't want to call you a generalist because you don't invest in absolutely everything, but
become a bad word to be a journalist. You see, but I think that's I've come to terms with it. I think you're absolutely right. Like, I think the benefit of being a specialist, you see, like you're industry line, I'm a fintech investor, or you are a technology line, I'm a AI investor, whatever that would mean, given that how broad that concept is. Like, I think that one of the benefits is that any incremental knowledge you learn is like useful to a broader share of your portfolio, and any incremental relationship you build is useful to a broader share of your portfolio. And one of the challenges I have is like I get pulled in like a lot of different directions. And so I think I've just come to terms with like it is unfortunately a worse lifestyle. It just requires more time. But I think it's worth it to be able to work with the best founders and teams and to be able to make bets on new trends that emerge, irrespective of whether it's. I think the challenge is like if you like become focused on a certain industry or thesis area, like you end up choosing the best within that area. And there are just years and decades where like very little changes about a certain industry, and that can happen. And so I think I've chosen to be really focused on, do I think that this is sort of, is this a team that's unique and sort of a theme that's at the right time.
How do you know where to focus though? Is there a period, is this seasonal? Like this year, maybe you're more into, I don't know if that's true, more into AI because that's the hypiest thing happening. Or maybe last year it was more into like dog longevity and FDA approvals. Like, how do you know where to spend your time? Because I'm sure you're getting bombarded with a variety of pitches in a variety of areas.
I think I've decided the evergreen approach is to just be around, star talent early in their career. And that's been a big part of my life. I ran the entrepreneurship club in college. And so my work has been around helping, very early career entrepreneurial talent, figure out their path to building a, market shifting company. And so we have certain approaches to doing that. We have a fellowship program, for example, that we're trying
that you've built out.
Well, with our team, that tries to sort of put together some of the most rising stars.
So basically, your approach is meet potential founders really, really early. I remember a couple of years ago, you were just starting out with your team, the fellowship program, and I think it's even college students. Correct me if I'm wrong.
It's actually for people a few years out of
college.
Their career these days. Some people say
I see it. Yeah.
It's actually, I would say it's interesting. Like there are a lot of college fellowships, and so we actually felt like that was a well-addressed market.
Okay, got it. So, but then you're also personally keeping tabs on the Columbia network.
That's right.
I think you're mentoring a bunch of people who are early in their career. So your approach, just to reiterate, is to stay in touch with early talents or talents that just has a couple of years of professional experience, and then see what they come up with, and then they come to you with the ideas that they are thinking about, and those ideas obviously happen to be in a bunch of different markets.
Yeah, I think like I think I'm just a neural net for predicting future career outcomes based on like a meeting with the person and their prior accomplishments, and so what I have is the benefit of like a lot more data set points than most people, because I started doing this a long time ago before I became a venture investor. And so my hope is that I think I have my ability to discern that potential benefits from having done it for a longer time and seeing more trajectories.
So let's say you meet a founder. Within the next 30 seconds, you probably know, okay, are they going to do something interesting in their career or not? What is this based on?
I would say it's not that precise.
Okay.
I would say it's more like they're unlikely. They might stand out either to the upside or to the downside, but also a lot of people are kind of in the middle. And I think that's okay for what we do, because I think as long as some people stand out to the upside, those are the people you would end up sort of focusing on. And then probably there are also people who are like, this person is obviously great, but it's also obvious to everyone else. So there's like not a lot that I could add. And so I actually sort of, that's also an area that's probably less compelling to us. To me.
So your scenario then is people who are more in the middle, where you could be helpful with something, or
I think they clearly stand out as having high potential that is not yet fully recognized.
Yeah. And what are some criteria for that high potential? Like, what could it be? What types of things are you impressed with?
I think these days everyone works hard, and everyone's willing to grind in a way. I think so. So the question is, like, what are the more rare things?
Yeah.
And I think one would be independent thinking. That is to say, that do they say things, like that? I'm like, that's really interesting or different. It's counter narrative, or it's at a level of depth that you wouldn't get from a McKinsey Institute report, on a certain market, right? I think that is, actually pretty rare. We live in like a super consensus time, and then I think it's like people who are like thinking about problems other people aren't thinking about. Like, there's a team I work with that like 3 years ago was like, oh, there's this like new class of drugs called GLP-1s, and they're going to be huge, and they're kind of like diabetes drugs that you could use for weight loss. And I was like, that's crazy, but like they,
Wait, did you end up investing in
this
company?
was months before Ozempic, and we did end up seed investing in the company. It's actually like a top performer in there.
Wow. So does that mean that they've already been on the market?
It's still in stealth, but they
I
money
see.
at over $1 billion valuation within like 2.5 years.
Wow. That's crazy. I'm always surprised with those examples where companies are in stealth for a while and then they raise at a crazy valuation. It happens a lot in crypto. It happens a lot in, I guess, like drug development too, but that's a completely different space where you actually need a lot of capital to develop drugs. But in this case, because you were saying that they're crushing it, they're doing so well, like where exactly is it that they're crushing? They're already on the market with their products. They're just in stealth because they're changing their name, or?
Yeah, they're already in market with their product. They sell to an enterprise customer, just pharma companies, and they believe that there is a network effect to their business, and that they figured out that something that very few people have, and so they want to reach escape velocity with respect to scale before they start saying too much about what they figured out, just the approach that's valuable, they think, to patients and doctors and pharma companies.
Got it. That makes a lot of sense.
I think the point here is like that original thinking.
Yeah.
It's really rare.
Yeah. How can someone develop their original thinking?
I guess you could start by, asking yourself, like, what are some of the things, is that classic kind of like Peter Thiel question of like, what do you believe? That like that
other people don't believe.
Yeah, I think that's sort of like the instinct in a way.
Yeah,
I think the other thing would be to like fall in love with the subject area, or like spend enough like deep expertise in it that you trust your instincts about it more than you trust like quote expert opinion about it. That could also be the case. Like, you just form opinions about something that maybe the others haven't studied that closely, or that your experiences on the ground are more novel, or reach a different segment, or come from a different perspective, and so you come to a different conclusion.
Yeah. I have a question about judgment. So you've obviously been doing this for a really long time, going on 10 years. Yeah. How do you refine your own judgment? Do you keep track of your experiences with someone, your impressions of them, and then coming back to that decision that you made in the moment and seeing how they're actually doing in their career? Obviously the same with the bets that you've made, or is there some different process?
Yeah, I think that you tend to look at the people and teams and companies you met along the way and how they've done, and I think you can infer lessons from that. As you said, the challenge in the venture industry is something that could look for good 5 years and then not be a good outcome. Something could not look good for 5 years and then be a great outcome, and so you can't over rotate on that. I also think my challenge, I'm curious if you feel differently, is I feel like I'm ultimately like very intuitive with respect to judgment. Like I can't always fully articulate like why I think something is really great. But I'm I now just like trust that like my observations and the data kind of like compiles down to some like sort of primitives in my subconscious that I can't fully interpret anymore. But that like hopefully I'm incorporating like mistakes I've made and also good choices I've made, in like my future intuitions.
Yeah, for sure. It's like pattern matching. I bet that you can lean into that more now that you're very senior at Bain. Like if someone's, an associate or an analyst, they likely have to have a very good explanation for why they have the instincts they have.
We've tried, it's funny you say that. So we've tried, especially more recently, to reduce that. It is dangerous, because some people say like venture is kind of a young person's job, because the world changes so fast and it's easy to become out of touch with how things work. And so we've tried actually. I think one of the things that we are working on as a team is allowing people to act more on their instincts, within sort of like reasonable like controls, and sort of say like, yes, we've talked about the rational reasons to not do it, but if you have an irrational sense like this person is just someone we must be in business with, and we're trying to really leave room for that for the whole team.
That's awesome. So given that the industry changes so much, how has VC changed or Bain changed from 2017 when you joined to now? What are some things that maybe are no longer true about venture?
I think that, one piece I wonder is when I got to venture in 2017, there was this, some people would call like the kind of assembly line for software as a service. We had sort of figured out all these metrics, and it was kind of like if you have $1 million ARR, then you could raise Series A, and you need an NRR of this amount, and there's all this kind of math and science that have been developed around a specific kind of company.
Yeah.
And I kind of think that it feels like that's over.
Really, it's over at Series A?
Well, it's over in the sense of like maybe the fact that we had such a quantitative rubric in the first place meant it wasn't really that venture-y. And maybe it wasn't really that risky in the first place. Like now that
because you have a formula.
Yeah, like it's sort of like I work with some like B2B AI companies, but I also work with teams like Loyal, in which you're talking about, that's trying to develop a dog longevity therapeutic, and we just have a very different set of milestones to talk about. We have a very unique story, and we had to come up with our own like definitions of when we're ready for Series B or Series C, and convince investors of that. And in some ways, it feels more like venture to me. Like I think venture's become less formulaic. And it has there's a wider dispersion of kinds of things people are investing in, which I think is great actually. But it's also more uncertain and maybe more intellectually engaging as a result. Like if you can't rely on these sort of numbers, at least at the early stage, then what are you relying on, in order to pick? I think that's it's a really interesting question.
Yeah, that's true. So on that note, with AI, how are you thinking about the market? What do you think is going to happen to the market? Are you investing less in AI first companies because obviously the valuations are crazy and the rounds are insane?
Well, I think as a firm, we're very active in this area, and we're fortunate to work with a number of teams that I think have caught the gates very hot and are doing well, from Crusoe to Decagon to Cognition and others. I think it is true that, like, for me personally, it feels more difficult to do these AI companies right now because it feels so consensus. The prices are very high. Companies are raising a lot of money on not a lot of progress, and maybe on like initial ideas that feel small. Or I think everyone's around the table sort of like, this person's great, we'll worry about the idea later, which is fine.
Yeah.
But you only do so many of those at a price that looks really high, before you wonder like whether the risk reward is good. So I don't know. I think that things I think about are like, new businesses that couldn't happen without AI, but we aren't selling the AI directly. So like, could AI enable marketplaces or network businesses? And I think about what are some other themes that are exciting but underestimated.
Yeah.
You know, 2 years ago, I feel like longevity was still at this like tail end of being really transgressive. I think where we sit today, it feels like everyone's talking about longevity. There's like gyms advertising their longevity.
Yeah, there's so many now private social clubs that advertise longevity. For instance, here in New York, a couple of weeks ago, I found out about this club called Continuum that charges $10,000 a month for an access to a private gym, to a hyperbolic chamber, to like a red light room, and I think maybe like 2 more things.
Yeah.
It's insane.
Yes, it becomes a bit like, you know, I think when we made that investment, I think that would have been hard to imagine that it'd be that mainstream. And, you know,
I mean, I think it's still hard to imagine that this specific business will be very successful just because I think price to the ROI is not very high, but we'll see, obviously.
Yes, continue.
Continuum.
Well, I think there will be more an interesting kind of, you know, maybe very science-driven longevity technologies that can emerge too, depending on policy. So I think I'm looking for that too. Is like, what are the things that people aren't talking? Another area I'm thinking about is it feels like autonomy is here.
Yeah.
Like self-driving cars are being deployed. You can take Waymo in San Francisco anytime. You know, the administration just released a new executive order around pilots of, you know, electric vertical takeoff and landing planes. You know, that could change a lot of things, but it doesn't feel like anyone is talking about the second order implications of this yet. And that would be like one example of an area. It's kind of like they feel like there's real technology change, but there's not a lot of discussion around the business opportunities.
So what is your consumption stack? How do you keep tabs on all these different changes that are happening? How do you think about second order effects? Maybe you have a writing practice where very diligently every week you're like, okay, I've heard about this thing, like this approval that administration have had about the pilots, and then you write down what are the things that could happen and what companies could emerge. Tell me more about your process.
Well, I think the key ingredient, of course, is, you know, early career people who have chosen to go into like something different. We actually met Loyal, the dog longevity company we work with, through their chief of staff. So their chief of staff was a fellow in our program, and we didn't sort of invite him thinking we would want to invest in Loyal eventually, but we got to learn more about the opportunity and understand it in a way that otherwise we would not have. And so part of this is like you're talking to people who are working on these frontiers, and not only the people, but also of course the people who work in AI right now.
Yeah.
I think but I think also, I guess something. And you meet a lot of VCs, so you tell me if this is different or not. But I think that a lot of investors are technology people. They like spend a lot of time studying like the latest, the latest capabilities, which I care about as well. But I'm like really a people, society, kind of world's affairs type person too. Like I read a lot of like Wall Street Journal, and I probably listen less to like All In podcast and more to like like Bloomberg Law, or I'm really into like Ross Douthat's podcast right now, where it's more like what are the big picture like societal challenges we're all talking about? How are the people's attitudes changing? And I think USB talks about this, but like I think it is as much a determinant of success of companies, which is sort of the like there are companies that are like this new technology enabled something, but a lot of stuff is like we decided that we can approve longevity medicines. We decided that that governments are printing too much money and we should buy cryptocurrency, right? Like these are kind of like social decisions that are probably more impactful than the underlying level of technology change that enabled the alternatives.
Yeah, and from this response and how you operate, I gather that everyone should just lean into what they're naturally interested in, what their natural strengths are. You gotta make the job work for you in your unique way. So for you, it's reading up about societal changes, politics, what happens in economy. For someone else, it's, being super technical and trying every new AI app under the sun. So that's really cool. So you've been at Bain, as we've already pointed out, for almost a decade.
Yeah.
How come you're not running off, starting your own funds or, doing the thing that a lot of people are doing these days, which is, what keeps you staying there for so long?
Well, the first is that I take my commitments to founders very seriously, and I think it's not a great experience to have, an investor lead for financing, take a board seat and then leave the firm. And, I'm sure you and I both know founders that have had that happen to them. And especially because I work with people that I've known in many cases for 2, 5, 10 years or longer, like I think it's a really high bar. I think the second is I think I've always tried to be mostly centered on where can I actually add value to the ecosystem, where can I actually help founders make things happen, or help companies happen, more than like work and more than like where can we get a share of some business that's working, and I think I feel there's still a lot to be done to, help harness like the power of the Bain Capital ecosystem to support founders. I think in some ways the market is moving in our direction in the sense that I think all the large firms are adding private equity or credit. They're adding like other asset classes that we've been in for a long time. And also I think the nature of these companies, that founders want to start. Is evolving, and more of it relates to the rest of the world that Bain Capital is very active and credible in. So, I think my North Stars here really is kind of what serves the founders and prospective founders the best.
That makes a lot of sense. On the BCV Fellowship, can you tell me a bit more about what the fellowship is, whom it's for, who should be applying, and what should someone in the fellowship expect in terms of programming?
We don't talk about it very much publicly.
Oh, okay, I couldn't,
But I think we are especially looking for people who are probably like 2 to 4 years in to their career. They're doing something at an interesting entrepreneurial company. It doesn't have to be like the most high flying company. In fact, like there are companies that are like sort of just figuring it out. But my observation is like most great young companies in Silicon Valley, there's like some 24-year-old or 23-year-old everybody knows is going to go on to do something incredible, and they probably have outsized impact, and we just want to meet all of those people, basically. Like I think about like I interned in college at this company called Adapar, and the summer after I interned, they had.
Did you work with Pierre?
I don't think so, dude. Yeah, I know that I have a lot of them. Yeah, but like I the summer after I interned, like Alexander Wang from Scale interned. The summer after that, like they had Scott Wu as an intern, and I just think like there are people like, I think the Valley has a way of like promoting people really fast, from giving like young people who are exceptional a lot of responsibility. And we just want to, a lot of those people end up starting companies and being somebody impactful regardless. And we want to get to know as many of that type of person, as possible. And we've created a program by which I think the value proposition for them is we've crafted around the realization that their schedule is probably 996, and so this is sort of like, to say you have one day off a week, we will try to fit into that day as something you probably would have done anyway. We surround you with, 25 other people that I think will be really helpful to know you can learn from, that, maybe you'll collaborate with or be co-founders with someday. And we'll inject sort of like our, network and capabilities into that. So, that is like, great speakers working at the frontier of technology, but also, guests from the economy beyond Silicon Valley.
That's really awesome. And I assume that people come to the program through referral and word of mouth, probably, because if someone's already working at a breakout startup, then they're in the periphery of the network. But do you have cases where someone has reached out to you, you've met them kind of cold, and then they became a fellow, or that doesn't really happen? Like if you got to be already in the circles.
We so rarely talk about it publicly.
Got it.
It's hard for them to come to us for that reason, but there might be people who the people who are highly recommended to us as people we should just get to know, and this is so we can then, reorient that conversation.
That makes sense. Okay, I have one personal question, as in advice that I would love to hear from you to me, and then we're going to move to rapid fire. Okay, so I've mentioned this to you in our catch up that I want to be a little more active in angel investing because I've had the opportunity to do so, and I've almost always angel invested passively where a friend is building something great. Maybe someone would pass me on a deal and I know something about the space and it looks great. But now that I want to become a little more active in it, how would you recommend I go about becoming better at discerning whether a company is worth investing in and not? Like, how do I basically become a better investor, given that this is not a skill that I've explicitly built out?
In some ways I hesitate because I feel like the beauty of the ecosystem is like everyone looks at things differently, and there is like kind of somebody for everyone. And so like and who knows, I have a certain judgment which may or may not be right. But I guess like, there's like, maybe there's generic advice and there's like kind of some things that I nudge people on. So like the generic advice is like, you just want to, ideally you're seeing a lot, if that makes sense, or like you are only doing stuff that comes to you from like very specific sources. So you might do something that's like, okay, you're going to focus on building like your personal brand and presence and in being someone that people want to work with, and then you'll just I will only participate in rounds that are led by people that I know and like. Hopefully like Kevin.
Exactly.
Yeah. But if you're going to do like, I'm going to be the first investor in stuff, and I'm going to help people to get around together, then maybe you just want to make sure you're seeing a high volume because, the competitive basis change, the profiles change from year to year.
I have a quick question on high volume. When you were saying seeing high volume, is it like just seeing their deck or is it actually taking the pitch?
I think like 80% of the information is in the pitch. Is in meeting the person.
Yeah,
and
exactly.
Okay. That.
So basically, first free up a ton of time to see a lot of things.
I will say though, like I think it's relatively unlikely that I was like the correlation between the deck being interesting. Like the cases where the deck is uninteresting and the founder is really interesting is like pretty low.
Low, yeah.
Yeah. I don't mean pretty, just like
it's just low.
Yeah. If the thinking in the deck is not that compelling, the thinking of person is unlikely to be that compelling.
Fair.
But yeah, my personal nudges would be like, I'm just all about. Like, I think the real danger is like I love the idea, I don't love the person. I think that's like almost never works.
Yeah.
Maybe in like consumer, where because like if the company can run away from you, right?
Yeah.
But
I think no matter what, you kind of got to vibe with the person.
I did though, for sure. Yeah, if you're doing angel investing, you're presumably you're like less likely to be like, I hate the person, but I'm going to give them my personal money. But I think for sure there's that vibe element. But I also think there's an element of like, which things are you willing to trade off on? And for me, like it's I've always regretted, like trading off on like how much I love the person.
Got it. Awesome. Well, let's move to the rapid fire question round. First, what is the check size that you usually put in? Or range?
4 million.
4 million.
We're usually involved with the seed, and then we'll reinvest. For me, usually involved with the seed and reinvest over time.
Yeah.
Obviously, my partnership, 15 in Series A, 30 at Series B and C, etc.
Got it. What's the biggest check you've personally written?
35 million.
Damn, that's a lot of money.
Yeah, for a team I work with that we did the Series A and they've got pretty well. Yep. High Touch, they just announced it.
Oh.
Yeah, they just announced they crossed 100 million.
Oh my God, congratulations. That's amazing.
Yeah.
That's awesome. I've heard about High Touch over the years. Actually, Marty Kausas from Pylon, I think he was their roommate. And
yes, he was. Yeah. They were at a very famous hacker house.
Mission Control. Yeah. Okay, you're a big foodie. Favorite restaurant in San Francisco?
Oh, I like food, but foodie always
Come
comes.
on.
It sounds like a foodie.
Okay, you're a
rapid
food
fire
connoisseur.
You occasionally eat.
Vacation at nice restaurants. Favorite restaurant?
Yeah, I wish this was more, more. I wish this was more under the radar, but our office is near Four Kings, and so I do put my name down off. But I think
Four Kings. Oh, it's the Chinese place. Oh, I've heard about it, but I've never been.
I would say, my friends would say it's not strictly speaking a Chinese place. It's like actually a very Chinese American place.
Okay.
Yeah, part of what I love about it is you go and their like playlist is like what my mother's playlist like on my way to like choir practice, would have been, bro. Yeah. So there's like a certain nostalgia about it, and it has Chinese flavors, but it's not I wouldn't say it's a Chinese restaurant.
Okay, that's really cool. I gotta check it out. If you weren't in venture, what would you be doing?
That's not a job. Sorry. So first of all, I think if money were no object and career advancement were equal, I think there was a good chance I would have done the foreign service.
Oh.
I think in practice it seems
that's amazing.
more of a hierarchical, like, it's just like a long time, but like that stuff fascinates me, like the interaction between, and interaction between how world leaders and, how that comes together into conflict or collaboration and the results, like, that's really interesting to me. One thing I thought about, like if I'm fortunate for this, to all work out, and I sort of can work more for fun, is being a political talent scout. So I guess the idea is like you go to...
It's like CAA, but for politics.
Yeah, exactly.
That's amazing.
Yeah, well, there's no money involved, basically, right? But like you go to like school districts or something, like someone who's running for a board of education in their town, where like if you donate $100, it's like a lot of money, on a relative basis. But you just like sort of find these people who are finding their voice, and they have a unique perspective to give, and they have the charisma or the force of personality, or they, have some vision that could benefit like their community, or some voice that would be valuable to have in our national conversation. Like, and you can sort of be like the first believer in that. I think that's kind of cool. It's not that dissimilar, I guess, to venture, but
that's really cool.
Domain. Yeah.
Okay,
I'm sure these people exist. I just don't.
Oh, you don't know if they exist?
I'm sure they exist. Yeah, I've never met one, but
that's really cool. It's kind of like music. There are actually people who support a young artist and scout a young artist, and then patron. Exactly. It's like patron. Yeah. Awesome.
So you probably can't say that in politics, but
I'm a patron of this.
Yeah, probably it doesn't work politically, but
okay. What's your personal traits that you're most grateful for?
I am very grateful that I don't tend to experience strong swings of emotion.
I can relate, actually.
Yeah, I think it's very helpful. I think as I've gotten older, I would say like when I was younger, it was a little more extreme. I'd say I was repressed feeling almost anything. And as I've gotten older, I'm trying to like channel it better. Like if I'm feeling frustrated, like recognizing why I do and trying to make that better. But I do think this is one of those jobs where like, managing how you feel, I still have swings of like, in terms of like confidence and self-criticism, but in terms of like anger or stuff like that, I feel like I try very hard to be quite even tempered.
Did you do something to be more even tempered? Was it just feeling your emotions when they come, or something else?
I think I came to realize relatively early in life that nothing good comes of it.
Very wise. Okay, who's a founder you wish you'd backed, but you ended up passing?
That's a good question. I'm trying to think. Well, like in probably 2021, 2022, this is less specific to the founder who's great, but at 2022, like we met this company that was using generative adversarial models. You remember the GAN era to like, they're like, oh, you can use GANs to like create images, you know, and it like sort of worked. But they're like, we can build a new like AI native, like generative design tool around this. And so we met this company Runway at the time that was at the sort of roughly the seed stage. And it was a really difficult round for them to raise. But I think like there was always something really compelling in that vision, that's sort of like, imagine a future where we didn't have to like hand paint each thing, but that, we could generate, art or video. That seemed radical, at the time. But I think is now, I guess, relatively consensus.
Yeah, that's awesome. What's a metric that founders over-index on?
Revenue, probably. Yeah.
Interesting.
Yeah, I think revenue is important.
Yeah.
But
I feel like revenue has become so much more important these days.
Yeah, I think that what we come to realize is sort of like, like something I was thinking about, again, now that I work with teams that are both kind of B2B technology and not, is like, in some ways, like having 1 million or 3 million or 10 million revenue is a big accomplishment. But in some ways, like, in the grand scheme of venture, like, it doesn't matter. Like it means like you have really momentum. It means you have really product market fit, but like what it means about your ability to reach $1 billion of revenue, which maybe is the new bar to go public or, have a great outcome. Because it seems to me like you can get to 100, 200 million in run rate, which is a lot of money, by the way.
It's like, that's easy. Whatever.
And like impossible to do on its own. But like you get there and actually if there's some ceiling or, you lose momentum, like it's not clear, what those businesses are worth. And so I think I sort of think it's more like, what is your, how much does this prove that you can get to, $1 billion of revenue? And I think that's sort of like more important in some ways than like the specific numbers in a given moment, even though obviously specific numbers in a given moment tell you likelihoods or trajectory or momentum or stuff like that.
Yeah, totally fair. And that's where I think founders have to be so honest with themselves of like, can they actually get to the venture scale? Because it all sounds great that you're making money and that you're building a business, but will that business actually be worth anything or go to the outcome that it needs to go to? That's the question. And there is that dual perception from the VC side and the founder side. Because on the founder side, you're like, oh my God, I'm making money. This is a real thing. But then on the VC side, it's like, okay, is this actually going to be real? Fair. What's your favorite book? Doesn't matter if it's nonfiction or fiction.
I think a book I read fairly early in college that kind of changed my mindset about things is a book called Dead Aid by Dambisa Moyo. As maybe is now obvious from this conversation, I was like a Model UN kid growing up, and this book is about the way in which foreign aid to developing countries hinders rather than benefits their economic development. And I think for me, it's, whether you fully agree with the thesis or not, I think it was an early example for me of like questioning the expert status quo and like questioning whether like the right intentions lead to the right outcomes, and sort of like trying to put a higher bar on like what actually is a set of incentives or does a set of systems you create will it actually lead to the outcome that you want. And that was a help, it sort of led me to have a certain skepticism, of the consensus in the future. But I think that's been, valuable.
Very impactful. This immediately reminds me of Basic Economics by Thomas Sowell, where he talks.
Similar,
exactly. It's very similar. Where your intentions might be great, but all evil kind of comes from initially from good intentions, is the saying.
Right.
That you really need to think about second order effects and an incentive structure, and things might look great on the surface level, but then when you actually dig deep to see what behaviors they create, then it might actually do the opposite of what you wanted. Yeah. And what's your favorite podcast?
I'm really into Ross Douthat's podcast recently. He's got some good guests. I'd say I didn't grow up religious, so some of the religious topics I'm less engaged in. But I like that he is a journalist in the classic sense, if that makes sense. Like I think he I think he tries to push the guests and tries to challenge them in a respectful way, but in also an informed and thoughtful way. So I've been enjoying that recently.
Awesome. And last question for the 25-year-old who's listening, has an idea, maybe have had it for about a year. What would your advice to them be, but hasn't actually done anything with the idea?
Oh, okay. They haven't emailed me yet.
No, I have not. Well, you don't like cold emails anyway, so I think that would be a lost cause. For its worth, I think for me, I think in some ways, like
idea matters to me less than how they got there. I think, but yeah, they have an idea totally because they care about some topic, they care about some customer or market, and I hope they're spending a lot of time, there in order to refine it. And then I hope they're asking themselves, like, what is the, we're really ambitious, like, what is the change that I could help affect here, and who do I need to help me do that with my team from an investment standpoint, and then reaching out to Luba and getting a warm introduction to me. Noted angel investor and creator.
Yeah, it's funny because I also kind of feel similarly about cold intros or cold reach outs. Yeah, we need a third person here.
Yeah.
Well, on that note, Kevin, thank you so much for your time. It's always a pleasure.
Thank you for having me. I'm honored to do this.